Alrighty, everyone. It is 1 o'clock and it is time for our webinar, Retaining Your A Players by Opening the Books, a live discussion about the ERP reseller industry. And Julian Schrenzel, take it away.
Thanks, Sierra. Hello, everybody, and welcome to Retaining Your A Players by Opening the Books, a live discussion about the ERP reseller industry with the Bryans, Brian Feraldi and Brian Stoffel. I want to start out. I am Julian Schrenzel, President and CEO of Dynexus Recruiting, Dynexus Group. And with us today are very extremely special, awesome guests that I have been really looking forward to having this conversation for you in front of. And that would be on top here, we got Brian Feraldi. Now, Brian is a financial educator, an author, and a co-founder at Long-Term Mindset. And Brian Stoffel is also a financial educator, co-founder, and chief content officer at Long-Term Mindset. Both of these gentlemen, I recently took a financial statements class where they explained the relevancy of financial statements to any business leader or business participant. And I really learned a lot from that class, and I was really appreciative of them. Brian and Brian are both, this is not their words, this is just me. They're both very well known and respected in the investing and financial education world. Both of them are contributing authors to The Motley Fool, have been in the past, I believe still are. You guys can confirm that. But both of them have a very large following of people who are very interested in investing and very interested in understanding financial statements and making good, smart business decisions using financial data. So Brian and Brian, welcome to this webinar. It's really wonderful to have you both on.
And thanks for having us, Julian.
Thank you for the warm introduction. It's great to be here.
You got it. So as I was doing some research, I talked to a lot of the companies within the mid-market ERP reseller industry, those companies that are small to mid-sized companies that are selling ERP implementation services and solutions. And what was interesting when I was doing my research about this is how varied people's mindsets are and how varied their understanding is of what do financial statements mean to the different people. Some people I talked to said, this is for leadership of my company. This is not to be put in front of people who are not making financial decisions, leadership decisions, my company. Yet other people said, sharing these statements, our cash flow statement, our income statement, sharing our financial statements is just part and parcel of being a open, a transparent culture. And everybody should have access to these. So it was really interesting to me to hear such a broad spectrum of opinions and what these statements mean to people. So I wanted to open this with a question, a two-part question to each of you. And the two-part question is this. I would like to know, what did it feel like for both of you the first time that you ever had exposure, the first time you ever saw a company's financial statements? What did that feel like for you, and when was that? And then the second part of this is, what is the most potent or powerful experience that you've ever had in an instance where you were reading company financial statements? So it's a two-parter, and either Brian, you guys could take that one at a time.
Okay, I'll go first. Cool. Hi, everybody. I'm Brian Feraldi. Thank you so much for having me. So I was a business major in college. So I did take an accounting class in college where we did, go over income statement, balance sheet, cash flow statement, etc. Like many people in college, I was not interested in the topic at all at the time. So it was very much, what do I need to do to pass this class? Not how do I get this information into my brain for use later on. So that was very much my mindset when I was first taught about financial statements. However, I was and I'm going to put this in air quotes, I was an investor after I graduated college, and I was investing in the same thing that the people on Reddit are investing in today, which is the meme stocks of the day. And when I first graduated, the meme stocks of the day were penny stocks on Yahoo Finance discussion boards. Like that is like the exact same mindset, the exact same thought process. How do I buy a stock that goes up 50% tomorrow, right? And I thought the way to do that was Yahoo's discussion boards. So I remember clicking around on Yahoo Finance at these companies. My sole criteria was, what's the share price? End of research, right? It was, is this less than $5 per share? That was the end of my research. But I do remember clicking over to the financial tabs for some of these companies and being like, I don't know what any of this means, and clicking back over. So I would say that would be my first exposure to financial statements, is when I was investing in garbage penny stocks post college.
How about you,
And your
Brian?
most potent, what was your most potent? I'm really curious.
My most potent. Okay. So years later, I would say my most potent time was after I'd been an investor for 10 plus years. My first time writing an article for the Motley Fool. I was asked to cover this very popular cover in the healthcare industry called Mankind, which is, the ticker symbol is MNKD. Is that what, I'm curious if that's what you guessed? But I had a firm understanding of financial statements at this point. I've been investing for 10 years and just been fascinated by this subject. And I knew the gist of this company, but I didn't look at the financials. And I vividly remember looking at the financials of this company and wanting to throw up. They were so ugly. They were so terrible. Gross profit was negative. Revenue was negligible. They were losing tens of $millions per year, and their balance sheet was upside down. And I remember thinking to myself, I don't know if this company's going to make it, make it for the next year or so. They had to constantly sell off assets and raise debt and equity at horrendous prices just to keep the business afloat. And the last I looked, that business was still alive, and the financial picture hasn't gotten better. So that one to me has been the case of, Mankind's still publicly traded. Look at that. And they've just diluted investors into oblivion. But that to me is like the case of, all right, if this company is still around and kicking, maybe it's really hard for public companies to go to zero.
Wow, awesome. How about you, Brian Stoffel?
So Brian Feroldi and I, we both graduated the same year of college. And if you were following us during the first, 5, 6, 7 years out of college, we couldn't have looked more different in terms of our professional paths. So I was a certified middle school, high school English and psychology teacher. I was teaching at a school in Washington, D.C. We had long hours. So I was good at math, but I didn't spend any of my time in college or professional time after college focused on math, investing, anything in finance. But when my wife and I had an early retirement, we took a year off and we lived abroad, and I had to figure out what to do with our portfolios, our 403Bs. That's when I started getting interested in investing. And the first time I opened up, clicked on the tab on Yahoo Finance to look at a company's financials, it was, I was forced to take Latin when I was in college. It was one of the requirements and I hated it. I think Greek would have been worse, but it's like the one class I just did terrible in. It was like reading Latin. Like it just, I know what a number is. Like I know what 400,000 means, but I don't understand how all the different lines play with each other or what the difference is between a short-term investment and cash. And so for me, when I started investing a long time ago, it was more about just trying to understand the story of why a stock might go up and why it might not, based on what I observed in the world around me, which you can do a lot worse than as an investor. You can. That's actually not the worst way. It was certainly better than what Brian Feroldi was doing in trying to find that penny stock that might go up a little bit. But it's so much better if you can supplement your ideas about a company in the real world with some understanding of their financial statements. Two quick stories to answer your second question. The first one, the most potent example that I can think of is one that actually, Julian, we shared during the class that you took, which is seeing how their operating leverage at Tesla kicked in to where they were keeping 2 cents of every dollar per sales as profit in 1 year and 10 cents the next year, and seeing what a huge difference that makes to a company's bottom line. That's the most potent example. But there was a moment in our class too, Julian, that I think was really telling. And we were going over Amazon's income statement. And I remember there was a student that they saw that Amazon's like e-commerce segment keeps like 1 cent of every dollar in sales. And she realized that their margins, because if you just look around and you see Amazon everywhere, you see the boxes, you see the vans, you see the fulfillment centers, you're like, this must be a huge, the most profitable company in the world. And don't get me wrong, they know how to turn a profit. But when she saw that and realized how slim the margins were, to me, that was the most potent moment I've ever seen someone else understanding what's going on at a company.
Interesting. Thank you both. That's very telling. So we're going to go directly into a series of questions that I'm going to ask each of you. These questions come directly from the ERP reseller industry, and they are directly related to those ERP leaders who are thinking about financial statements and what it means to share financial data, be it rosy or not rosy, with their companies. And so these questions are coming from that industry, and I will pose these questions for either of you Bryans, both of you Bryans, to be able to come in and speak as you wish. So the first question to you is, what is the value in giving my technicians, my salespeople, my marketing staff access to complex company financial data that my accountants, my controller, and my executives use?
So I would start by answering that with a word that you said at the start of this when you were introducing, and you mentioned that there were some companies that did this and some did not. And that was the key word for me was culture. What kind of culture do you want to have at the company that you are working at? Do you want the culture that you have to be closed, to be secretive, to be where people whisper to each other? Or do you want the culture to be open, to be collaborative, to feel like you're on the same team with each other? To me, one big way that executives at companies can connect with the lower levels employees at companies is to share an overview of what's happening at the business, almost like giving like a State of the Union address to everybody at your company and your frontline workers. Now, there's very good reason that sharing that financial data there's reason to believe that sharing that financial data won't be understood by the people that you're sharing it with, because very few people, my guess would be less than 5% of non-executives, non-accountants, know how to read financial statements. But I do think it speaks volumes from a cultural perspective to say, we're going to open our books, we're going to share with you, we're going to give you the same information that we have, that we are using to make decisions. And if you do so, I think you dramatically increase the buy-in that you get from the lower level employees once they have to implement those decisions.
You know, you said, Brian, when I was in your class, one of the stories that you told, which was really spoke to this, I feel like, was when you were working in corporate and you were working at a accounting level. I wasn't sure where you were, but you had, I don't know what you were. You were
nope,
tech,
wasn't on account level. Yep. I was in sales.
Whatever you were a peon. And
a peon. Yep.
And you were given access to a company financial report and were able to be able to reshare with your immediate team the intel of this, but translate it from being crazy, hard to understand financial garble to something that actually is reasonable and understandable by anybody who's working in the organization. And that information, that report that you put out, was picked up by your manager, who forwarded it to their manager, who forwarded their manager. And then the next thing you know, you're at an event, your company event, and your CEO calls you up on stage to be able to share this information and promoted you to be able to give this information to the entire company. What an amazing thing to have someone at the very bottom be able to provide such valuable financial insight to everybody at every level, and to have the CEO understand and value that.
Yep. And just to be clear, so I was a salesperson, and I just, for post-college, for whatever reason, just became interested in investing. I don't know why. I took to it like fish take to water. It's just like become a big part of me. It's something that I personally loved. Because I was an investor, I had to learn how to read financial statements. I had to learn how to think through them as an investor does. And I kind of acquired that knowledge on my own behind the scenes. the company I was working for, I was in sales, frontline sales, literally nobody below me, right? Everybody was above me at the organization. And my company went from being private to public. So the reason I got access to the books is because we were a public company. And every 90 days, the company would have to report earnings to the investors. Now, I would look at them every single time because I was a shareholder in the company, and I would make notes to myself and track our performance and make forecasts because a significant amount of my net worth was tied up in company stock. One day, I decided to take the notes on the quarter that we just had and share them with just my team, right? Just the people on my team, the other people that are the lowest level. And I also copied my manager on them. And to your point, it made its way from my little circle to everybody at the company. And I became known as the person that would break down the financial results for the company once they reported and share them and explain them to people. So for me personally, I think it boosted my visibility in the company that I was working for tremendously because people realized that I wasn't just a salesperson, that I also understood how to think through financial implications and read financial statements.
Thank you, Brian. That's awesome. Second question, I'm going to bring this over to Brian Stoffel to launch on this question. But this question is, how would my non-financial employees gain the important insights from our financial statements? And I want to mention the difference between question one and question two is question one asked, why would we, what's the value of giving this to other people? And this question is about how would they gain the value? What are they going to get from us sharing this? And I'll bring this to Brian, you, Mr. Stoffel, go ahead.
Yeah, so the first thing I want to say is just to reiterate what Brian Feroldi said. There's a chance that if all you do is open up the books, then they're at least gaining the insight that you trust them. Even if they can't look at any of it, they're gaining that insight. But I think it would behoove you to translate it in a way that's understandable. And here's an example of why. Now, Julian, I don't know if you're aware of this, but there are few industries that have been worse to invest in than airlines. But there's one airline in North America that has consistently been a great investment. Can you guess which airline that is?
I'm going to either say United or American.
It's actually not. And not only is this airline one of the only ones that's never had to declare bankruptcy, it also, for a period of 20 to 30 years, was one of the best investments in the S&P 500, which you would never, ever guess based on this.
I hope it's not Spirit or Frontier.
It's not. Thank God.
Okay.
It is Southwest Airlines. And one of the things that Southwest did under their previous boss, I think it was Herb Kellner who was there, what he did was he didn't necessarily open up the books and show everything, but what he did was what we hope you might do with question number two. He took all the data that was in those statements and he broke it down and said, it costs us X amount of dollars to fly a plane from point A to point B. So let's just say it's $100. It costs us $100 to fly from point A to point B. Each person that gets on the plane gives us $1. If we fill the plane with 104 people, then we make $4. If we have 99 people, we're losing $1. So you might think that it doesn't really matter if this person comes or this person doesn't. It doesn't really matter. He was like, the difference between having, and again, I'm making these numbers up, but what he did was he broke it down. He said, when we have 104 people on board, we can be a sustainable business and you can get paid. When we have 99 people on board, we no longer have a sustainable business and people will need to get cut. This is not me threatening anything. I'm just sharing the way that it works. And he said, so that extra smile, that giving the pillow, that seeing if you can get them a can of apple juice instead of just a cup of apple juice, that whatever it might be, the wings that you give to the kid, that's actually the difference between having 104 and 99. And I don't think it's a mistake. So again, he didn't just open the books and let it be. He actually did the translating for them. I don't think that it's a mistake that it's one of the only airlines in North America that's not declared bankruptcy and has actually been a good investment. So there's some legwork that you have to do if you really want your non-financial people to appreciate it. But I can't imagine a scenario where it's not worth it, because then they understand where the profit drivers are. Those flight attendants knew that the profit drivers were, we need 104 and not 99 people on board. And then all of a sudden it improves the business.
If I had to summarize the value of what you're saying, it seems to me like you're saying that everybody has a stake in the success of a company. And when they understand the nuance of what literally makes the company profitable and what costs the company money and where's that line, everybody can work together to make the company profitable. But it doesn't just happen magically. You have to have financial education for everybody to be able to understand why 99 people doesn't work and 104 does, and why then being really excellent at what you do to attract that all makes sense financially, right?
Exactly. Because there are some people at your company that will probably get it, but those people are probably the ones that are the accountants, the controllers, and the executives. You want buy-in from everybody else.
Yep. Very good. Thank you, Brian. That's very, very telling. We're going to move to question 3. And before we do, I want to mention something I didn't mention in the beginning, which is those of you audience members, as you come up with questions, undoubtedly you'll have questions in your mind. I want you to feel free to use the chat. Use the chat option there, which I believe, Sarah, is also on LinkedIn. They can chat via LinkedIn. They can chat via Zoom. Wherever you are, use that and ask your questions, because in the Q&A at the end, we're going to be asking those questions of the Bryans. So please don't hesitate. Don't be shy. Use that chat. All right, we're moving on to question number 3. Question number 3 is, what if our financial picture is not a pretty one? Wouldn't sharing this knowledge cause employees to consider leaving for greener pastures?
Yeah, that's a fair question. And of course, there is always that risk. If you open yourself up and make information available to them, it's possible that some employees could draw conclusions about your business and choose to stay or choose to leave based on the information that you are sharing with that. Of course, that is a risk. But however, think about what the start of that question is. What if our financial picture is not a pretty one? What kind of decisions are you making as a manager at the time if your financial picture isn't a pretty one? I can bet you're saying, can we give raises to employees this year? Nope, we really got to cut down on that. Are we going to do a corporate retreat this year? Nope, we can't afford to do so. Do we have to slow hiring this year, even though our people are overworked? No, we can't. Our financial picture isn't bad. Imagine if you're a frontline worker and all your management team says to you is hiring freeze. That's it. That's the only information that you have, right? If you're an executive and you're looking at the financials and you're like, things are not going well, we have to do A, B, C, D, E in order to get our financial picture back in order. What you tell your employees is do A, do B, do C, do D, right? And most of the time that is bad news for the employee. So what you're doing is you're telling your employees, do this because I said so, and here is bad things that are going to negatively impact your culture, essentially because I said so. Now, what if in that same dialogue you say, hey, here is our financial situation. Look at the state of the business. A, B, C, D are under pressure right now, and because of this, we have to do D, C, E as a business. Suddenly, you're empowering your frontline workers with actual information about your thought process, with why you are doing things in your business. That would create employee buy-in much more so than saying, here are the rules, do what I say. Here is bad news without any other information, do what I say. Moreover, if your financial picture is bad and these things are coming out, don't you think the rumor mill is going to be swirling? Don't you think people are going to be fretting about their jobs? Don't you think people are going to be talking to each other and asking each other questions about what's going on with the business right now? You actually have the opportunity to squash the rumor mill from starting by actually providing information to your employees. But is there a risk of providing financial information to your employees? Of course there is. But I think the benefits of gaining employee buy-in outweigh those risks.
And
Interesting, Brian Stoffel. Yeah.
Yeah, if I could just add to that, because I think that Brian Froley made a compelling case for opening up the books when your financial picture isn't pretty, because that's the time when you're going to be making those tough decisions. I just want to say that there might be less of an impetus to open up those books when your financial picture is pretty, but choosing to do it when your financial picture is pretty will make it so much easier when you hit those unavoidable tough times, because every organization goes through tough times. I've never heard of an organization. Look, Facebook was one of the biggest, most profitable companies in the world. I think financially, they probably had no problems from like founding up until maybe a year ago. Even they are running into tough times. And if you've established that beforehand, then when those tough times hit, you can get creative. So for instance, there's a company that we both know called Lincoln Electric. Now, Lincoln Electric is a publicly traded company, but they also have always opened their books to their employees. And as part of their plan that they put in place, they give a bonus to every employee based on the profitability. So the employees know that those bonuses aren't guaranteed. It depends on how the company does. And sometimes those bonuses are huge, like tens of thousands of dollars to frontline workers at Lincoln Electric. But they also realize that when hard times hit, then they're all going to share the pain equally. And so Lincoln Electric was one of the few companies that not only did they not lay anyone off in 2008, they've never laid anybody off in the company's entire history. And at Lincoln Electric, Brian, I think you were sharing some stats that they were able to come up with a situation where they shared time and they elected to take time off so everybody could still have a job in 2008. And even though the pay went down, their levels of happiness actually went up during that period. Is that right?
Oh, wow.
Yeah, there are documented cases of companies that essentially say we have a no layoff policy. Nucor, the steel company, is one company, and they have a broad policy. We do not lay off employees, period. So because that is off the table, everything else is on the table. And one of the things they do at Nucor is they actually have what they call shared pain, and the pain is disproportionately impacting the executives at the company. So the higher up you are at the company, the more of the pain you bear for yourself. So the CEO takes the biggest cut, and then the executives below him, and then the managers, and the people that take the least pay cut are actually the frontline workers, but they do still take a pay cut. The reason that they do that is because they want to fulfill their obligation to say, if you work here, you will not be laid off. However, our financial reality is our financial reality. Our industry is cyclical. Sometimes we are minting money, other times we are burning capital. And during those times that we're burning capital, our promise to you is that we're not going to lay you off. Your promise in exchange for that implied benefit, your pay is going to go down when times get tough. However, your pain is going to go down less than my pain as the CEO is going to go down. And that just builds such trust and admiration on the front line, from the frontline workers all the way up to the CEO, and it just builds one cohesive team. There are other instances of that there about companies going through painful periods and having similar things to saying, we have to cut our expenses to blank to survive. Like, we have to do that. How we do that is up for debate. And one thing that I've heard some companies do is they say, can anybody work part-time? Can anybody cut their hours from 40 down to 10? And they actually had a job bank that they created. I'm sorry, I don't have the company off the top of my head. However, the employees from themselves said, okay, my spouse works. I can take a temporary pay cut to get through here, where other people were like, well, I'm the only breadwinner in my family. I can't do so. And the employees themselves actually made those decisions about how the pain was actually shared. And that increased loyalty to the company. It increased engagement amongst the employee.
Isn't that cool? Because layoffs can be, there's like no harder thing against morale, no hack to morale worse than a person who felt like they were giving a lot getting axed.
Yep.
When they felt like the company attracted them, where you're part of the family, and then all of a sudden layoffs is like, you're not part of the family anymore, you're laid off. How cool they did. I wonder if Costco's the same. I don't think they've ever laid any. I used to work for Costco, and they don't pay awesome. And their vacation policy is really lame, but they never lay people off. and they're a good company, at least from my experience and what I know about them. I wonder if they're the same. They have never had a layoff, but
they also have the benefit of being in a recession resistant industry. And in fact, the worse it's doing in the economy, the more likely you are to shop at Costco. So there's that.
Isn't it funny? Yeah, there is that.
But that's
too.
a great company, no doubt.
Yeah, good. I'm going to move to number 4. Question 4. What financial statements would be appropriate to share?
So I think that the big one is the income statement. And for those that aren't familiar, income statement, you've got revenue at the top and then the cost of revenue. So then you get your gross profit, and then you've got to subtract out all the costs for doing business, your sales, your marketing, your research, your general, and then you have your operating profit, and you get down to your net income or net loss. That is by far the most popular and usually the most instructive to include. Now, you can also include your balance sheet and your cash flow statement. The cash flow statement requires a lot of work to understand what all the moving pieces are. But I'll say this, income statement seems like a no-brainer. But again, if you just give them the income statement, you're missing an opportunity. You're missing the opportunity to do what that executive with Southwest did, which is zero in on 1 or 2 variables that are the biggest drivers of returns. So like I research a company called Datadog. And what I have one thing that I'm super focused on, because I know if this metric is going well, then the company is probably doing well. And that's how many customers are using 5 or more of their products. And so I know that. I know how that affects customer retention. I know how it affects their cash flow. I know how it affects their balance sheet. And I know that if that one is going in a certain direction, the company is probably going in a certain direction. So income statement opening again, that's great. But if you can do the translating, and the great thing is then you have to think about what's the 1, 2, or 3 metrics that are the most important. Okay, now I'm going to teach them why it's the most important so that it's not just, yeah, here's the income statement.
Yeah, I would just say, totally agree. I would say the income statement would be, if you only shared one thing, make it the income statement. I would also put the balance sheet in there because that gives you context for, can you, how long could you withstand a downturn? What is the financial strength of the organization? The cash flow statement is the most complex and the hardest one for people to kind of wrap their head around. But if you want to share that with your employees, I would say kudos to you too. Can I go on a small tangent for a quick second?
Yeah.
One thing that I notice a lot of companies do is they motivate and compensate their employees on revenue. Right? They train their salespeople to chase revenue. And I myself was a salesperson and I chased the thing that I was being compensated to do so. One interesting little twist on that I would suggest people at least think about is don't compensate your salespeople on revenue. Compensate them on gross profit. Right? Make them account for and make them accountable to not just the revenue they generate, but rather the gross profit that they generate. In some cases, they're giving out bigger discounts than they would otherwise do so to customers in order to earn the business, because the only thing that they care about and compensated for is revenue. What if you go one step below that and say, nope, the thing we actually want to compensate you on is gross profit? Suddenly, the quality of the revenue, which is something CFOs should care about, might go higher. So just quick aside, I want to throw in there.
Brian, a lot of the companies that are listening today sell their services as a subscription. So they're not so much selling like a big sale in the front where they're selling software and then they implement the software and then they're done, and then the company might use them as consulting. And so they sell hours. It's kind of this is the old way that was done. They move more and more these days. Companies are going on a pure subscription basis where they lower the cost, the front end cost of selling the services, selling the software, and all that makes it low, but they make this commitment to like annual subscription. And so it goes from a big upfront win to a sustained one where so long as you keep your customer happy, they're going to stay and they're not going to go anywhere, and they're going to keep on paying you month after month after year when most of the work is front loaded in doing the implementation, and then it gets down to minimal, but they're just paying to keep the switch on. how does that, and so what that invites in my industry is a lot of questions around like, how do you compensate your salespeople? This might be out of your bailiwick, but if it's not, I'm curious because you used to be a salesperson and you, Brian, might know this well, but how do you have any thoughts on how a leader might best compensate a salesperson when you're in a subscription-based model where that revenue is coming year after year, and the real important thing is to keep your customer happy, not to get the big deal?
Well, I'm just going to jump in for 1 second. What I would say is to compensate them on some small percentage of that monthly revenue, so that, you know, if they sign $100,000 contract that's front loaded and then every month they're paying $1,000, make that commission come from the monthly subscription, so that they know that that's where it's coming in. Now, that's just I was a teacher, so what do I know? So I'm curious to hear what Brian Feroldi says.
I would just say in general, one of the trickiest things to do is how do you align incentives? How do you align incentives across organization and across stakeholders? So I would say, as a CFO, what is the thing that I want the business to do? If I was teaching my salespeople, I would say I want new customers that are sticky. Right. And I want repeat sales. So I would think of doing some kind of combination of, you make X for landing new customers and you make Y for reselling or upselling new customers over time. So I would lean, let's just make this up off the top of my head. Let's say their bonus bonus availability was like, you know, $10,000, something like that. Perhaps you do half of their compensation is new logo wins. 40% is upselling existing logos, and 10% is renewals, because those are the easiest thing to get as a customer. So you want your salespeople out there hunting and bringing new stuff in the door, but also maintaining those relationships and upselling them over time. That would be very lucrative for the company to do so, and it would increase the switching costs of doing so. So I would think about a way to just align it more with what the business, what is in the health of the business over the long term. But it's very natural to say, well, we're just going to pay you to get new business in the door, and that's it. But maintaining relationships and upselling, especially in the SaaS world, is very lucrative and can do a lot to make the product even stickier. So I would just make sure that you're incentivizing that as well.
Well put. Question number 5. Most companies that I know in the ERP reseller world are privately owned and keep a tight lid on their financials. What would it mean for this to change to where my competitors and I could more easily ascertain each other's finances?
Brian, I'll let you start because I've got another idea on this, but you've already worked out your ideas here.
Sure. So what we are suggesting isn't that you go out of your way to share your financial information with your competitors. We're not saying that we should do that. What we're suggesting is that you should consider opening up your books to your employees, to the people at your company. There are upsides to doing so, and there are downsides to doing so. But the big question that anybody has to ask themselves is what kind of culture do you want to foster? Do you want to be open and honest with your employees, or do you want to be closed? Do you want to be closed guarded with your employees? That is very much a philosophical question, and I would say that many people, their natural default is to keep their book closed and guarded. And I think that that's overlooking an opportunity, because there can be benefits to opening them up. But if your concern is that your competitors are going to get a hold of your financial information and they're going to do all kinds of things to you, well, by that logic, that would mean that every single public company is at a massive disadvantage when compared to all of their competitors. That would very much be like saying Hershey's can't compete with Mars because Hershey's has to open up its books to the world because it's public and Mars does not. Clearly, that is not the case. Many public companies have taken share in their industry against private upstarts, and they've done so with open books the entire way. So I would say that would be an overblown concern.
Thank you.
And the one thing that I'll just add to that is that we're also not saying that everybody is ready to open up their books to their employees right now on day one, because you've got to make sure that you understand them, and then you've got to make sure that you aren't revealing something. But I think it would be an aspirational goal to reach a place where you were sharing it, one, for the culture reasons, and two, because if you're opening it up, like, hopefully you're already being very intentional about how you make decisions. But I have found, for instance, that when I started announcing every investment I was going to make publicly in my writing for the Motley Fool, in videos I have on YouTube, in posts that Brian and I do, I have definitely become a much better investor, because all of the I have to seriously question myself. I have to be like, am I certain this is something I want to go on the line having done? It's going to force you to do that, and that might be uncomfortable, but I do think that in the long run, you make better decisions when that's the case.
Excellent points, both of you. Thank you very much.
One last point I want to throw out there.
Yeah.
Let's pretend that you committed to opening your books in some way. Maybe once a quarter, you open up your income statement and you go through the process of explaining to your employees what the numbers mean. I guarantee that is going to make you learn your business better, because you all of a sudden have to think through, how am I going to present this information? How am I going to explain this information? And the fastest way, the best way to learn something yourself is to force yourself to teach it to other people. When we both, I mean, both Brian and I have been investing for I've been 15 years, him over 10 years. When we created our course on financial statements, we learned a ton ourselves about financial statements, because we were suddenly on the hook for teaching them to other people. It's amazing what you learn yourself when you go through the process of forcing yourself to teach it to somebody else.
That's totally my pathway. That's how it worked with me. I took a financial statements class of yours, and then I went and I started committing to a regular cadence meeting with my team to talk about finances from the pres. And I do that on a regular cadence. It's taught me a lot. Question number 6, final question. Is there a way during financial difficult times to share financial information in an empowering way that won't spook employees?
So I think that by far the most important thing regarding this question is to make sure you've had a chance to digest this information. And if it is a financially difficult time, either one, have a plan in place so that you're not just saying, guys, revenue fell off a cliff and we're screwed. Like that's not helping anyone. If you have a plan, and you can say, guys, look, here's what's happening. Revenue has fallen off a cliff. Here's my thoughts on what we can do. And then depending on your situation, you can say, so that's why we're making these decisions. Or, so these are my thoughts on this. What thoughts do you have? My email box is open for the next 48 hours. I'm going to read through any suggestions you have discussions about this in your teams. Let me know what you think, and then we'll make a decision. But don't just show up with bad news. Either have a plan or have a forum where people can brainstorm ideas.
Yeah, I love that. And I'll just double and say it's natural to think that you in leadership are the one that's going to be responsible for coming up with all the good ideas that you have. I think the best businesses actually empower their front end workers when they're actually doing things, dealing with customers, going through the data operations. Imagine empowering them to say, do you have suggestions for how we can do things differently? Because I guarantee you they're thinking through as they're going to the job, why the heck are we doing it this way? This is dumb. We could save money if we do it that way. If all of a sudden you open your books up and the news aren't good, and you say them, we need to find ways to save money. Can you help us come up with ways to save money? You will get feedback from your employees, ways that you probably didn't even think of yourself. And it gives you the opportunity to make your business leaner and stronger, so that when the rebound eventually comes, you can actually emerge stronger than when you went in.
Yeah, I think what I'm hearing from you guys pretty strongly is that you can go two ways. You can hide all the information and be insular, or you can share this information. And the value gained from sharing the information in a responsible way, where you educate people what this means, can elicit their assistants. They could make them part of the making the change. They can activate these people at every level to make the difference that you want to see happen with the company. And that value seems to really offset the potential risks, the risks of my financial data will become out into the world. My people will leave if the financial data looks bad. Like, those downsides don't seem as important or as salient as the power of the upside. Do you agree with that?
I think that's a trade-off that, let's just acknowledge that trade-off exists. We're not saying this is a slam dunk. We're not saying that every company has to do this. We're not saying that it's only upside for doing so. There could be potential downsides for doing so. The real key question that everybody needs to ask themselves is, what kind of culture do I want to build at this company? Do I want a culture that encourages openness and honesty, or do I want a closed-minded culture where that allows rumors to flourish? Like, personally, I don't want to work at a company that is close-fisted with information. I don't want to work at a company where management makes decisions and it just comes our way and it's like, tough. That's what you have to deal with, right? Do you? Do you want to be a worker at a company like that? Like, I certainly would. Like, period.
Neither would I want to be a worker there, nor would I want to be the kind of leader that dictates that kind of in that way.
Right.
It's not. Right. It's not fun. So we have a couple of audience questions at least, and they are coming in. So the first question I see is, how often should reports like cash flow statement, balance sheet, be shared? Annually, quarterly, monthly? Are there advantages to that cadence as well?
I mean, I don't have a great answer for this, and I haven't been in the business world like Brian. Quarterly is the standard if you're a publicly traded company. I think it depends on what you're sharing, because there's some things that can be very lumpy, and it might make more sense to do it on a yearly basis. And there are some things that aren't as lumpy, like maybe just sales figures. Like, I know those go out monthly for a lot of different companies. So I think it depends on what you're deciding to share. But Brian, I'd be curious what you think.
I would say at the very least, as often as you're compensating your performer, as you have employee-based compensation. So if you are, do you incentivize your sales and marketing team on a monthly basis? Do they have monthly quotas? Maybe you should share monthly. Do you do that quarterly? Maybe you should share it quarterly. Do you have annual targets for the business? You could think about doing it annually. But I would say the cadence isn't as important as a decision to do it or not.
Yep. That makes great sense. So here's another one. It comes from the question about, what if our financial picture is not a pretty one? Wouldn't sharing this cause our people to leave for greener pastures? It's on the other side of that. And it goes on the flip side. What if our financial picture is a pretty one? Could employees then be asking, I know I've contributed to that success. Why haven't I received a raise or an extra bonus that reflects that?
Well, sure. I think then you have to answer that question. Like, I think it's actually really good, because then you've got to figure out why you're not compensating them more if it's going so well. And you have to explain what that means. Yeah, I mean, it's a great problem to have, right? But I think it's a really good question, because coming up with that answer is going to force you to be on. That would be painful, and it will help you when tough times hit. Like I said with Lincoln Electric, they give away. Listen, Lincoln Electric gives away huge bonuses that you don't see from a utility. They're a utility company giving tens of thousands of dollars to frontline employees in good years. And you got to decide, is that the kind of company you want to be? And maybe it's not.
Interesting. Yeah, this actually, I know this question is not from this person, but one of the conversations I had with one of the partners that runs a company is, in the bad times, this was their take. In the bad times, we leadership team, we got to carry things. And that takes a lot from our leadership team. So in the good times, we kind of owe it to ourselves to take a little more than what other people might think is fair, like what everybody might think is fair. So that was one of the thoughts around, like, in the bad times we carry, but in the good times we should be able to pay ourselves without causing everybody to have to agree or be mad because they felt like we took too much from the company. So I see that question, but I also see your value, Brian.
Well, what I would just say is if you've opened up the books, then maybe you don't have to carry as much in the bad times. You know what I mean? So like that's the trade-off, is that you're trading that unlimited upside for, it can only get so bad during the tough times, because instead of feeling like your small C-level team is doing the lift, it's really 100 or 1,000 people doing the lift. But Brian, I want to hear what you have to say.
Yeah, I would say again, it gets a philosophical question. If that is the management's philosophy, if what you said is true, and the management's philosophy is in the bad times, executives take a pay cut, but in the good times, we take a bigger cut, make that information available in your company.
Yeah.
Just tell them, okay, during the bad times, executive pay goes down. Right. Our compensation is very highly correlated with the profitability of the business. The offsetting factor to that is that during good times, our compensation rises as the business does better. Make that information available. Moreover, we're not saying that you have to open your books and show a line by line detail of what every single person in the company makes. Look at how public companies report. Some of them just say after gross profit, operating expenses. And everything's in there, right? The CEO pay is in there, all the way down to hourly workers is in there. We're not saying if you don't want to, you have to give granulated look at here's what every single person in the organization makes this year. You can keep that information kind of cobbled together if you choose to. The other thing I just point out is during good times, if your profits are rising and you're going up, you can have a dialogue with with your employees about what your plans are for that profit. Is the plan to build a cash hoard so that you can get through the next downturn? Is the plan to make an acquisition? Is the plan to build a new factory? Is the plan to shore up your balance sheet? Like, what are you doing with the capital that you're generating, right? You can say, yes, this is the capital. We're going to reinvest this capital back into the business. If your plan for that cash is, well, we're just going to pay it out to senior management, let them know. But just because your business is doing well, that doesn't automatically say that, okay, the business is doing well, therefore all that profit's going to go to the employees. Let them know what your long-term plans are for the business, because if that capital is earmarked for expansion, that could mean new opportunities are opening up for the employees down the road as your business grows and expands.
Totally. That fully makes sense. There's another question that's coming in that is probably take a little bit of additional information, but really the question in its raw form is how does the financial discussion relate specifically to the ERP arena? Same ideas will be applicable to other industries also. So the question I think really is those people that are in the ERP reseller industry. I think we talked earlier about sales compensation in the SaaS model, in the revenue subscription model. It's SaaS is IT, like IT is software as a service more and more every day. And it's not like it's some like ERP resellers are some crazy different pocket of companies. But I think there is a feeling that we're different. We're so different. Would you think, you guys who work in all kinds of industries, in financial education, within every industry, do you see the ERP reseller industry being significantly different in terms of this conversation from anybody else?
I think the metrics that you're choosing to zero in on might be different. But the act of actually just opening it up and saying, hey, here's the variables that matter the most, and here's why, I don't see that as fundamentally different. That could be anything. That could be, I think nonprofits should, like the school I was at, it'd be great for them to open it up and show that. I think anybody can.
Good.
I think in the ERP market, with the software that ERP provides, it's not optional. It's mission critical. You can't just suddenly decide to stop using your ERP software, right? That tends to be the software that literally powers your business. Changing vendors from one ERP system to another is an enormous deal. And often those ERP systems are literally mission critical. So when you think through the operating costs of a business, cutting out ERP would be essentially right next to, okay, we're bankrupt. right? We're going out of business. Like we need to get rid of our ERP system. So I would say that companies that are in the reselling ERP systems are actually in a really good place to open up their books because their financials are likely to be highly predictable and highly stable. Like that is one of the best things about software is the dependability of the software, especially some software such as ERP is essentially like utility. It's a bill that must be paid, right? So I would say that positions a lot of companies to put them in a really good position to share that information because it's not like they're going to be a steel maker where revenue quadruples when the economy is booming and then it falls by 90% during bad times. So I would say that companies in the reseller ERP market are particularly likely have great financials to continuously share with their employees.
I could say that's true. I can tell you. One more audience question before we begin to wrap up. And that question is, should you segment your financial meetings? Have one for sales, one for consultants, one for marketers, or should everything be shared with everyone the same way?
Oh, I would do it all at once.
What I would say is I would do it all at once too, with the caveat that we're not running a big ERP company. So what do we know? But it is possible that it helps to know how all the pieces work together, right? So in my example of Southwest, knowing that those 4 extra seats make all the difference, if they only gave that information to the airline stewards and stewardesses, then how might that look different than if they also told the baggage handlers and the pilots about it? Now, the baggage handlers might be like, well, that doesn't affect me, but it actually does, because if your stuff gets lost or it gets damaged, then all of a sudden they're like, well, I'm never interacting with one of these 5 people who can swing us from profitability to not. But what I do will make a difference as to whether or not they come back. The pilot who decides that she's going to stand outside the cockpit and say goodbye to people as opposed to staying inside, that might affect it, even though that's the only interaction they get. So even if you're in support and you're not in sales, but you understand that for every time you hold on to that client, it'll make a difference. That's why I think it's worth opening it up to everybody.
Thank you. Got that, Brian. The final question, which I'm going to take this another question because it gets us right, segues us into the finale here, is how can I help my employees become empowered in understanding financials? So when I share financials, it has impact. And that I think will take us right into the final here, which is what I think you guys should talk about, what you're doing and what you offer, that these people might be able to help their teams learn from you guys' experience. Can you talk a little bit about what you're doing and what you offer?
Sure. So in general, yes, if you just open up your books, you will likely have lots of confusion from the people that read them. When I worked at the company that I was working at, I was one of, I would say, a handful of people at the company that actually understood the financial statements that were being reported to the SEC every quarter. And by the way, I also include members of the executive suite in that conversation. There were people that were in the executive suite that excelled at engineering, they excelled at sales, they excelled at marketing, they excelled at HR, whatever their specialty was, and they themselves were financially illiterate. They could not read financial statements. Yes, they could understand revenue and they could understand profit or loss, but the numbers in the middle, they didn't understand what they meant. They didn't understand how raising capital worked. They didn't understand what shareholders' equity works. And many people are not taught those things, or if they're like me, even if they were taught those things, because they weren't using them in their day-to-day job, the information that they were taught in college is useless to them. Financial statements come alive, and your understanding of financial statements come alive when you're interacting with them, when you're seeing them regularly, right? It's an exposure thing. The more exposure you have to it, the more you understand the dynamics of how they work together. But I do think if you as a senior management team can not only present the information to your employees, but you can explain very simple context to them. Like, yes, we're focused on revenue, but we're also focused on cost of revenue. We're focused on gross profit. Here are the costs that we have as a business. And the lower those costs can be, the higher our profits can be. And then you can say things like, what if you incentivize the company to increase its profit margin? What if you have payouts based on what your reported profit margin is or your operating margin? Suddenly, fortunately, everyone at the company cares about the same thing that you do, which is the profitability of the business. So it is on you to not only provide the information to them, but to provide context to them, and of course, answer the questions that they have as they come along.
And to get to what you were saying, Julian, one of the things that Brian and I do is we do have a YouTube channel where we talk about a lot of these concepts. You'll see us on social media all the time. He's at Brian Feroldi and I'm Brian_Stoffel_. But the way that we got to know Julian is because he took our course, Financial Statements Explained Simply. And I don't have a link with it right now, but our course is listed under Maven. I think right now it's the #3 most highly rated course on maven.com. Anything else, Brian, you want to throw in there about that?
Yeah, what we do in that is we explain financial statements. So we go through how to read a balance sheet, how to read an income statement, how to read a cash flow statement. We show real world examples that are happening today of companies that have reported earnings. We explain through what each of the concepts mean, and we do one-on-one homework with people to actually go through, read, and interpret the financial statements themselves. We ourselves are investors, but we aimed the course at not only aspiring investors like us, but also people that are in senior management or people that want to move up in their organization. If people are going to be coming in to your C-suite, isn't it important that they know how to read and interpret financial statements? So that's what our course is designed to do.
Wonderful. And we will be posting after this, we'll be posting you guys' YouTube link. We were going to post your social media links. We want to post out to your class on Maven. So we will provide all of this information on in chat and make it available in posts subsequently after this. But is there anything more either of you would like to add just in closing? Is there anything additionally on your mind at all?
I'll just say that I think Brian really hit it on the head when he said, we're talking about numbers here, something X's and O's, black and white, but what we're really talking about is culture. And I think it's important to remember that.
Yep, absolutely. Absolutely. Brian Feroldi, Brian Stoffel, thank you so much for your time and your expertise and sharing this with our community. We just appreciate your time and thank you. Thank you very much.
Thank you for having us. It was a great discussion.
Wonderful. Sierra, why don't you close us out, please?
All righty, everyone. Thank you for joining us. If you have any questions, don't hesitate to reach out. Julian, if you want to go to the next slide.
Of course. Thank you.
There's our information. You can go to dynexusgroup.com. You can also contact the Bryans. We can also put that in our post so you guys can see that. And we had a great time with you guys. So thank you very much.
Thank you very much.